What's up guys, it's your boy Balo Trader here. Today in this new video we will talk with you about what to do if your strategy is not profitable and how basically to fix it. But before that, as always, we will start with technical analysis and placing our first deal. And we will start with the pair of Australian dollar to Canadian. We will invest in the price growth after reversal and price rollback. Let's switch to broker and open a deal for 100 with 4-minute expiration time. And back to the trading view for more detailed analysis. On this pair now globally established a downtrend which is clearly expressed by the movement before the opening of the London session. Towards the end of the price drawdown and the sharp drop, the formation of the downtrend turned into a sideways movement. Pricing of this asset went on leveled volumes from both market participants. And after the opening of trading at the London session, with the peak volumes the price fluctuation intensified, the chart began to form a new movement corridor. Initially worked out a local rise in the price and reached the previous support level. Activity was changed from buyers to sellers. The movement turned from the resistance level and in the same range of movement has already broken through the support level. This is a local jump in price in a strong situation of the market volumes from sellers. Now I expect a return to the previous values in the rollback, so open a deal on the price growth after the breakdown. So let's move back to the broker, and let's move on to our main topic. Misplaying a strategy can be a serious obstacle for you if you are striving for success in binary options trading. Misunderstanding your strategy and applying it incorrectly can lead to underestimated risks, wrong decisions, and ultimately financial losses. Let's lay it all out in a nutshell. It's important to understand that each strategy has its own peculiarities and requires a certain approach. One of the common mistakes that can be associated with misplaying a strategy is ignoring its signals. If you don't follow the signals provided to you by a strategy, it can lead to missed opportunities for profitable trading. In order to apply your strategy correctly, you need to study it well and understand its peculiarities. One should not forget about the psychology aspect of trading, which can also affect the correct application of the strategy. Emotional state can lead to the fact that the trader will ignore the signals of his strategy or make decisions that do not correspond to its concept. Are you looking to take your binary options trading to the next level? Then connect to my private channel for exclusive access to my personal mentorship, lots of trading sessions, individual feedback, and more educational materials. By joining my private channel, you will receive invaluable insights and guidance. You will have also access to live training sessions where you can trade side by side with me and learn from my strategies and techniques. In addition, you will receive individual feedback and support to help you identify areas for improvement and refine your trading skills. To join my private channel, simply send me a phrase "I want some honey" in my personal Telegram. The link to contact me will be in the description down below the video or in a pinned comment. In order to successfully apply strategy, a trader must learn to control his emotions and make decisions based on specific rules. He must be able to assess risk and understand that every trade is an opportunity for profit but can also lead to loss. The trader must be prepared for setbacks and not allow them to affect his next decision. I always recommend testing a strategy on a demo account first to make sure it fits your trading style, and only then move to a real account and start earning. Calculate the pros and cons of using that particular strategy. Let's make a small stop here to pick up our first win of the day and move to the analysis of our next pair, which is British pound to US dollar. We will invest in a price drop after reversal from the resistance level. Let's switch to the broker and open a deal for 100 with 4-minute expiration time. And back to the trading view for more detailed analysis. Prior to the increase in activity associated with the growth of volumes, the price worked in a bearish trend. On the seed releases, the chart was established a new local minimum on the price. After that, with the reversal from this low, a local bullish trend was formed. In general, we can talk about a change in the trend because in this segment we can observe an increase in the heights of a price. On the strong volumes, first of all was a breakdown of the previous support and resistance levels, and soon a breakdown of the resistance level because of the strong activity from the bulls. After the breakdown and working out of the influence change in the market, we see a sharp drawdown but in the working corridor of a flat movement. With reaching the support level expectedly after this fall, we see a reversal growth in volumes from buyer's side. On this pair, after the pullback from the upper range, I have already opened a trade on the continuation of the fall with the additional signal from the volume indicator because we see the increase on the sales. So let's move back to the broker. And as you could see, we caught a rollback. So in this case, we need to use a cover for 2-minute expiration time with $200 on board, but still for the price drop. In the meantime, let's get back to the strategy. Another one reason why a strategy may not work, and one of that many people miss, is because of technical analysis. If your strategy is based on market analysis, mistaken technical analysis can seriously affect your ability to predict price movements. Often mistakes can arise from misunderstanding the fundamental and technical aspects of market analysis. For the correctness of your technical analysis, study charts and other indicators which can help you determine the current state of the market and its possible direction. But if you misinterpret charts or fail to consider other factors such as trading volumes or support and resistance levels, your strategy could fail. To avoid these mistakes, don't stop constantly improving your knowledge and skills in this area. Consider both fundamental and technical factors when making decisions and do not rely on only one aspect of analysis. Another common mistake in market analysis is to focus on short time frames and without considering long-term trends. For example, you might think the price is falling and you should open a down position, but it may be just a correction against a general upward trend. Checking long-term charts can help you understand the general trend and make more informed decisions. I always say to check different time frames, compare, and make conclusions based on different data. I noticed this problem without most of those who ask for advice. Misapplication of a strategy can occur if you do not properly understand and apply your strategy, ignore its signals, or do not follow the rules of risk management. The psychological aspect of trading can also affect the correct application of a strategy. Emotional state can cause the trader to ignore the signals of his strategy and to make decisions that do not correspond to his concept. In general, in order to avoid problems in the strategy for trading, it is necessary to understand and apply one strategy correctly. Not to make mistakes in the analysis of the market, as well as to take into consideration the psychological aspect of trading. A combination of technical and fundamental analysis can help increase the accuracy of predictions and increase the likelihood of success in trading. And as all of you may notice, not only our cover closed is plus, but the entry is a plus as well. So we have today 3 out of 2. Thank you everyone for watching this video. Do not forget to subscribe to the channel, leave a like and drop a comment. See you in a while. Have a good one. Bye.